All right, and greetings, everyone. Albert Liu here with Rick Rule and Leont Marius Florin here for this Rule Classroom live stream. Rick, how are you doing today?
Well, thank you, Albert. I finally managed to join the live stream on time, which means I'm beginning to overcome my Luddite tendencies with your help.
You shocked me, Rick. You shocked me, keeping me on my toes. All right. Well, we have 45 minutes today, so a little bit shorter than usual, but we'll make good use of it. Rick, before we get underway, I just want to remind everyone we have the Developer Bootcamp coming up on January 6th. I've been talking with Doug Silver about his keynote address. It's going to be great again. He's going to do another one of those over-the-top presentations. Lots of data. You know, Doug, his motto is test, 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 I think. So, Rick, what are you looking forward to?
Well, Doug Silver and Per Jander, I have to say, Albert, when we put on a boot camp, we knock the ball out of the park with our keynote speakers. And by the way, I'm not talking about either Rick Rule or Albert Liu. We've done a wonderful job getting industry people to keynote. Doug is, of course, just an absolute genius at this. I thought that the overview he gave about royalty and streaming was worth the price of the boot camp generally. And there's nobody that I can think of that would be better for the developers boot camp, given the fact that the financial stack, that is the financial part of building a mine, is of critical importance. There are 5 or 6 people that we probably could have talked to about the technical aspects of development, but I don't think that anybody's ever taken on a task like this before from the financial standpoint. And I think the financial standpoint is what's really critical to the investor community.
Absolutely, Rick. And just putting Doug on screen, he is also the author of this book. Great book, Rick. I picked it up in advance of the show and learned an awful lot about the history and also the players and what to look for, what not to look for. One thing that Doug always does for us, this will be the second time in a row, but he likes to point out red flags. And I think it's really important because you did a great job sort of, priming us for this in the classroom. And he's going to come in and tell us, what are the flags to look for when you're looking at these companies?
Yeah, that's important. And I want to reiterate the importance, too, to everybody on the call to do these boot camps in the context of the classroom. We are beginning to build enough content, but in particular enough classroom content, so that the boot camp itself will reinforce some of the lessons that you've already learned. In addition to that, Albert, I think it's important that people who come to the boot camps understand that in the 8.5 hours that the boot camp covers, it's impossible to absorb all the information that we're going to deliver to you. So it's important, I think, that members of the Rule Classroom reinforce the lessons that they've learned in the boot camp by repeating the boot camp several times.
Right, and those are available, if you attended, those are available here in the classroom under events. So tickets are available within the boot camp, within the classroom for the boot camp at a discounted price. You can go to the Discovery tab, and then in the featured items, it'll be the first one there. Okay, let's move on, Rick. Got a lot of questions, I'm sure. It was funny, Rick, I had Adrian Day on yesterday, and he did a great job. We went 90 minutes with the Q&A. People in attendance loved it. And I noticed that whenever a question came up that had one of the holdings in his book, his eyes got really good. He could pick those out. And then I had to read him the other questions. So if at any time you see a question that stands out to you, Rick, go ahead. Otherwise, I will just pick them out. Let's see. Kevin asked, thoughts on Adriatic Metals, Rick? It's being commissioned right now and begins production next month, according to their IR department.
Adriatic maybe is one that we should approach to be an exhibitor at the Developers Bootcamp. Adriatic is in late stage. They're financed. They're under construction. For those who are listening that don't know, Adriatic discovered and is now developing a polymetallic, I think, volcanogenic massive sulfide deposit in Bosnia. The deposit, depending on the various metals prices, will likely be silver dominant, and I hope it'll be promoted as a silver mine. I hope it'll turn out to be a silver mine. Importantly, they're in the boring phase, which is to say they're in the phase where they talk about how much concrete they've poured and stuff like that, which investors and speculators don't care much about, but which is important. If they deliver the deposit on time, on budget, importantly at nameplate capacity, which we'll probably know in Q2 2024, I suspect the stock will be a double at current commodity prices. Notice I said if they develop it on time, on budget, at nameplate capacity. When you de-risk a deposit, and the biggest de-risking is nameplate capacity, you have the ability to really have answered a whole bunch of unanswered questions at once. There is zero doubt in my mind that once the deposit is built, it will grow. Volcanogenic massive sulfide deposits, I believe this is one, although there is some debate on that score, tend to occur in clusters. So the fact that they've discovered 3 economic lenses, I don't think defines the limit of the deposit. But as I say, the next stage here will be delivery of on time, on budget. And it'll take sort of 60 to 90 days of breaking in the mill before they can disclose whether they are or are not at nameplate capacity within the constraints of the feasibility study, which with regards to production and costs.
Okay, great. So I hope that answers your question, Kevin. And an invitation to the boot camp is not an endorsement, but it's close. It's a pat on the back.
I own you, among other things, and I am willing to risk my reputation by showing you to our customers. And I do, in fact, own Adriatic.
Yeah, excellent. Steve Barton's in here. Hello. Jason, Ash, good to see you guys. Mark asks, any opinions on El Oro resources?
Great press release. I'm doing some work on El Oro right now. There would appear to be there appears to be some discussion among the technical communities with regards to the continuity of that deposit, and so I'm doing some work on that, and I'm hoping to enlist the assistance of Justin Tolman,
okay,
a better geologist than I, to assist me with that.
All right, that's the Justin Tolman from Sprott here in Carlsbad. Compliments on your shirt, Rick, but also any updates on Battle Bank?
I had a meeting with the FDIC the other day.
Okay.
I would say it was an interesting meeting. In fairness to the FDIC, as they've pointed out to me informally, they've had an interesting year themselves. While I think that Battle Bank is the most important file on their desk, it seems as though Silicon Valley Bank, First Republic Bank, and Sovereign Bank, among others, have taken priority. We're working through our difficulties, and frankly now, I hope they don't approve us till mid-January. After they approve us, we have 90 days to get open, and I wouldn't like Christmas interrupting that menu. I would say that we're coming along. I'm happy to disclose that we have almost 11,000 potential customers on the wait list. At the same stage of development with regards to Everbank, we had 0. Right. We have 3 products I'm really attracted to. 4 really. One is the US dollar standard deposit product, where unlike many of our banking competitors, we actually propose to pay you interest, including on your checking account. The second, of course, is the capital markets program, where you can save federally insured in 22 different currencies, not just the US dollar. The third, of course, is the checkbook IRA, the idea that your IRA is in fact your IRA, and your RIA can own a LLC, which owns rental real estate that you operate, or invests in private equity if that's what you choose to do. At Battle Bank, your RIA is exactly that, your RIA. And finally, it amuses me that none of my banking competitors believe that gold is good collateral, despite the fact that it's highly liquid. And I really look forward to being the most important retail gold lender in the world through Battle Bank. If you own gold or silver in segregated accounts so that we can control the inventory, we will happily open what is in effect a margin loan so that you can access liquidity with regard to your gold and silver holdings without having to sell them. I hope that was a good commercial, Albert. I'm very, very, very excited about where we are with the bank.
Unexpected. So at least you had a meeting and things are moving along. That's great. Let's see. Question from from Nick. You were going to evaluate Silvercrest, Rick, a while ago. Did you get a chance to do so?
I did, and I'm not unattracted to Silvercrest at the current price. I would disclose it as I would describe it, pardon me, as fairly priced as opposed to cheap, given the new resource picture. I continue to believe, and the management of the company agrees with me, that the deposit is not yet growing. But in terms of what you see being what you get, I would describe it as fairly priced at today's silver price.
Okay, question from Steve. You may want to go back, Steve, and listen to the live stream from yesterday if you weren't on with us. We talked a lot about Franco yesterday, but Steve asks, 120 a share was, in his estimate, is fair for the loss that they've incurred. Today it hit 104. Rick, what do you think?
I'm not going to quibble with the arithmetic. I would leave it like this. Franco has lost about 38% of its value in the context of losing an asset that accounted for 15% of the net present value of the company. That sort of price action relative to that diminishment in net asset value is overdone. The second thing I would say is that I don't think the final chapter at Cobre Panama has necessarily been written. The Panamanian government is subject to international arbitration. There is $10 million in hard dollar expenditures there. This is a taking. There's an existing contract. This is a mine that in its relative infancy generates 5% of Panamanian GDP and well over 25% of the country's export earnings. So I think in the first instance that the deletion, if you will, of Cobre Panama from the assets of Franco-Nevada has generated an unwarranted deterioration in the share price. And I also believe that the final chapter on Cobre Panama has likely not been written. I was on BNN this morning talking to 80,000 Canadians live, and my top pick was in fact Franco-Nevada for just that reason.
Okay, wow. Scott Williamson in the chat. How are you, Scott? Cohen and Bill is this live? It is indeed. It is live. So please feel free to enter your question. Let's see. Kevin is looking forward to hearing about G mining. I don't know if you have anything for him today. G mining is going to be a sponsor at the Developer Bootcamp. Rick, your quick thoughts on G mining?
Yeah, absolutely. I've been a follower of the Gignac family, the G, a French-Canadian mine contracting family through 3 decades. And they have a wonderful track record of success building mines. In particular, they have a track record of success building mines in high rainfall, tropical terrain, open pit. Guess what? They're building an open pit mine in northern Brazil in a high rainfall, tropical terrain. They are doing what they do best. They're doing it on behalf of shareholders. Like many gold stocks, the share price of G mining has declined. And I suspect that given that they're in the boring period of the Lassonde curve, where there's no particular news coming out, if they are successful delivering the mine on time, on budget, at nameplate capacity, a discussion we had earlier today around Adriatic, I think that the price will really re-rate. I am really attracted to them because I watched them build the Fruta del Norte mine for Lundin Gold. And I watched this up close and personal as a large shareholder of Lundin Gold. They did an absolutely spectacular job building that mine. The consequence of that is that when they went out looking for money to do their own mining deal, G Mining, the lead investor was the Lundin family, based on the experience that they had with the Gignac family in Ecuador. There isn't a much better testimonial than a very large investment coming from the first family of mine development.
Okay, let's see. So a question from David Alexander about prior boot camps. David, if you don't see the replay in your account at Real Classroom, just send an email to bootcamp at realclassroom.com or DM JC here. She's actually in the stream, and we'll make sure that you get access to that. So that won't be any problem. B Anonymous says looking forward to battle. So we got an A Anonymous and a B Anonymous. This is just opening the floodgates now. You know what's going to happen now. David asks, do you think Seabridge Gold will finally get to the altar this year?
I don't. I think it's going to take $2,500 gold for Seabridge to get to the altar. The only way that accelerates itself is to the extent that there is an exploration success at Seabridge around a high-grade starter, like the success that Bob Quartermain had on his part of the deposit, which became Pretium. This is one of the largest undeveloped gold deposits in the world. It's massive, but it's fairly low grade. You need either a higher gold price or you need a high grade starter for that to work. I am a shareholder because I happen to believe, at least in the distinct possibility of a higher gold price, at which case all these marginal ounces skate into being economic. I regard this as the cheapest futures option in the gold business. But the other thing that would accelerate it, of course, would be a high grade hit. And they're drilling like mad to find one.
Okay. Alex asks, thoughts on Brunswick exploration and Independence Gold?
Don't have enough information on the former. The latter I'm interested in, but I haven't bought. So I'm continuing to look.
Okay. And is that a question of more time is needed, Rick, or lower prices needed?
With regards to Brunswick, it's just not on my list. I have about 40 companies ahead of it to review.
Yeah. Okay.
Time, yes, mine.
Right. Okay. Jason asks your thoughts on Ivanhoe Mines.
I continue to be a large shareholder of Ivanhoe Mines. I have sold some because my average cost is below $1. You get a 12 bagger, a 13 bagger, and you take some off the table. I think the exploration results that they're beginning to enjoy in the Western Foreland are incredible. And the company's track record of exploration success is also incredible. They are in the fourth debottlenecking at Kamoa-Kakula at the same time that they're preparing Kapushi, the highest grade zinc mine in the world for production, at the same time that they're preparing the Flat Reef, which is a gigantic nickel, platinum, and palladium mine in South Africa. In addition to that, they're spending $90 million on exploration in 2024, including exploration in the Western Foreland in Congo, which is to the west of their existing Kamoa-Kakula deposit. But they're expanding the exploration much further west into Angola. We understand also into Botswana, and we understand too that they're looking to make transactions in Gambia. Now, this is no longer a cheap stock. Those of you who have followed me for a long time, remembering me recommending the stock at 63 cents when it had 90 cents a share in cash in it. It isn't that kind of deal anymore. This is a company now with a $15 billion Canadian market cap. But it's also a company that is operating the highest grade major copper mine in the world, where production is slated to double in the 4-year time frame. As well as I say, bringing on 2 more tier 1 mines, which have already been discovered in the development phase with wide open exploration upside. This is not for the faint of heart. If you're talking about political risk, it doesn't get much riskier than Congo and South Africa. On the other hand, you don't seldom find enormous tier 1 deposits in locations that make you comfortable.
Okay. From Aiden. Aiden, your name sounds like very similar to an old friend of mine in Ireland. So Aiden asks, any thoughts on the current price of Cameco as an entry? Should he wait for a pullback or pull the trigger?
I think if somebody doesn't have uranium exposure, they need uranium exposure. And either Cameco or, in second best, the Sprott ETF to cover the waterfront is the place to go. If you already have uranium exposure, I don't think you have to buy Cameco at this price. I do think that Cameco is part of any sensible uranium portfolio. When the generalist money comes into uranium, which it has not yet, it will come into the least challenging name. New York Stock Exchange, Canadian jurisdiction, large undeveloped portfolio, reasonable balance sheet, good near-term production expansion. It has everything going for it. But the stock has run from our initial recommendation at $8 up to $44 today. I would no longer describe it as unloved or cheap.
Okay. Let's see. From Cohen. Have you done any homework on mining projects in Tasmania? And how would you rate Tasmania as a jurisdiction compared to others?
I think as a political jurisdiction, Tasmania is okay, but it's sort of the British Columbia of Australia, which is to say it has the largest concentration of Green voters down under. The mineral endowment is interesting. Savage River is a good iron deposit. There's been a couple of gold fields down there. Beaconsfield is an example, but I haven't seen a deposit of the size and tenor that would, at present at least, make me take on the political risk of the domestic political jurisdiction down there, which is largely green.
Okay. And guys, if you want to come on screen, just put a question mark in the chat and we'll put you on screen. Let's see. From Bill, any thoughts on Morian Resources?
Morian is a company that is, if you will, suspended. I don't mean suspended by the exchange, but their producing coal royalty has been shut down by the province as a consequence of a cave-in inside the mine. I think the provincial mining inspectors are probably being excessively cautious. But the fact is, if you have a circumstance where you're endangering the lives of lots of underground miners, you might want to suffer from excessive caution. These are very, very, very high quality people. They have an aggregates mine, which will come into production in a couple of years. But in the near term, everything that they do revolves around the reopening of the Cape Breton coal mine, something which I believe will happen within 12 months.
Okay. And from John, thoughts on Arizona Metals?
I don't have anything to say about Arizona Metals at present. I don't know enough about it to have my comments be worth listening to.
Aaron asks about your thoughts on Hercules Silver and Barrick purchase.
Hercules, I just flat missed in the seed stage, which is too bad. I was invited in. I didn't have the sense that historic silver district was really the expression of a deeper porphyry. When I saw the drill hole, when I saw the core, and I saw that bornite smiling back at me, I became a buyer. I'm not sure this is going to be a large porphyry, but the mineralization in the core was it was geoporn. It was truly spectacular. So I must say I'm a shareholder now. Of course, I'm not alone in that. My understanding is that Barrick, among other major mining companies, now has a stake in Hercules, probably for the same reason, understanding now that the epithermal mineralization, the silver mineralization on top, was really leakage from a porphyry underneath. The question becomes now, how big is the porphyry? There is zero doubt with bornite and the chalcopyrite about the fact that the grade is there.
Okay, let's see. Brad asks, I think he wants your opinion on the recent merger between Nova and Metalla.
I think it had to happen. I think the creation of Nova was opportunistic from the management's point of view. This was a way to make themselves a whole bunch of cheap stock, capitalize on the success that they've already had. And I think the game all along was to combine the two. I think it's a fine company. Frankly, it's probably not my pick of the second tier royalty companies, but they were early in the space. They were extremely efficient aggregators of capital, and they've done a reasonably good job on aggregation. They now have critical mass. I don't own it, but I wouldn't argue against its inclusion in a second tier royalty portfolio.
Okay, this question came up yesterday. I think it was Adrian who asked it, but Adrian is, he says he's struggling to reconcile buy and hold with cyclical stocks. Rick.
So am I. I think it depends on your time frame. I commonly own stocks for 5 or 6 years. But when a sector comes back into favor, if I believe the stock is fully valued, I will try to sell it in favor of a stock that's involved in a sector that's less in favor. For most people, a buy and hold strategy involves holding the stock over a long weekend. Most people are speculators. So what I would describe as a trading strategy, which is to say a 5 or 6 or 7 year strategy, other people would likely regard as a buy and hold strategy.
In the times when you have held, Rick, is it a case where, as Adrian says, it's a free ride? You've taken your cost off the table?
Not always. There are circumstances where I have a stock that doubles, but the news gets better. So rather than selling half, I buy another half. It's really a function of the juxtaposition, as we stated so often in the rural classroom, between the price of something and the value that we ascribe to it. To the extent that something becomes fully priced, if there is something that is we consider underpriced, we're inclined to move from the company that we see as fully priced to the one that we see being underpriced, provided that the tax arbitrage, which is to say the haircut that we take from the capital gains tax, isn't so extraordinary. You'll note as an example that although my average in Ivanhoe is less than $1, I'm still a holder of a substantial amount of Ivanhoe because I can take the political risk associated with owning assets in South Africa and Congo. But I really understand the question. If you are thinking in realistic timeframes, and I would suggest that the 5-year timeframe is a realistic timeframe, there is no way to juxtapose buy and hold with cyclicality. When the sector returns to favor, when the sector is uniformly earning 50 or 60% operating margins, and still on a price EBIT basis or a price earnings basis, the net present value of the deposit is accounted for in the enterprise value of the stock, you have to begin to consider either selling or putting in place a trailing stop.
Rick, do you decide beforehand how long you're going to allow for a thesis to play out? Or is this something that you watch over time? How do you?
I think it depends on the thesis. If we have a thesis that doesn't involve exploration, it doesn't involve construction, rather a thesis like the uranium bull market, I'm pretty patient. The truth is, Albert, you've known me for a long time, and you know I'm always early. So we have to allow 2 years for my eagerness. And it's not uncommon for me to have to wait 5 years for a market-related resource thesis to come into account. I remember very well thinking about the gas bubble, natural gas bubble that occurred in the 1980s, the fact that the United States was producing way more natural gas than they'd anticipated as a consequence of the drilling boom in the 1970s. Well, that gas bubble turned into a gas sausage. We all thought that if we could survive what we thought was a bubble, that things would do well. But the natural gas price stayed below the cost of production for about 8 years. Similarly, in uranium, I was attracted to the uranium thesis as early as 1998. The move in uranium got underway in 2022. So there was 4 years where I was early, 4 years at an 8% cost of funds, let alone a 10% cost of funds. Arguably, you're not early, you're wrong. Now, the truth is that in that uranium bull market, I got paid such extraordinary rents on the stocks that I owned that there's almost no discount rate that would take away the gain. If my memory serves me well, at the beginning of that bull market, there were 5 uranium juniors in the universe. I owned them all, and the worst performer of the 5 was up 22-1. That doesn't mean that there wasn't some psychological trauma involved in holding the stocks with no move except a down for 4 long years.
Okay. A question from David. He wants to go back, if you don't mind, to the 1970s, Rick. You've talked about your adventures up and down. And he says, can Rick explain the mistake he made in the 70s when he became paper wealthy and made a round trip back to the starting point? Thanks and cheers.
Yeah, I didn't understand that markets worked. That was my mistake. Through the decade of the 70s, I was attracted to the resource thesis really in high school. I came to understand that we were not investing in the resource business. I couldn't have articulated it as well then as I do now, but that the economy had been in very good shape for 20 years. And it occurred to me that we were going to have a Malthusian-style resource shortage. I got caught up in the narrative because I was right. I made the mistake of, many young men do this, confusing a bull market with brains, which is to say that I thought that my investment performance through the decade of the 70s was a function of my genius. I didn't take into account the fact that the gold price went from $35 to $850. The natural gas price went from a quarter to, for deregulated deep gas, $15. And I paid attention then to the big thinkers, the Royal Bank of Canada, Exxon, International Energy Agency, United Nations Development Agency, all of them said that we were going to face $200 oil. And I didn't understand at that point in time that markets work. The cure for high prices is always high prices. The cure for low prices is always low prices. And I made another young man's mistake. I was convinced by several friendly bankers, and I was easy to convince, that debt was a cheaper source of capital for me than equity. I was described by these bankers as a blue-eyed sheik and encouraged to take money. Encouraging a young man who has been successful to take money is sort of like encouraging a young man to drink more whiskey. It's an easy thing to do. I did it. And when the price of oil, instead of going from $30 to $200, went from $30 to $15, what I found was that the asset values that I enjoyed were ephemeral, but my debts were money good. And I did, in fact, round trip it. Now, while that was very, very, very painful for me, I learned extraordinary lessons from it. I would suggest it was those lessons that allowed me to build the money management business and the brokerage business that became so successful. I used to joke with clients that I was trading them scar tissue for fees, which was a very good trade from their point of view. And I still guess I believe that.
Tom wants to know, Rick, is Ivanhoe exploring in Saudi Arabia?
Ivanhoe Electric is exploring in Saudi Arabia, a different company in the Friedland stable of companies. Yes, they are exploring in South America. And by the way, they're exploring in conjunction with Ma'aden, which is the national mining company of Saudi Arabia, who is also a shareholder in Ivanhoe Electric. Robert has a real focus on Saudi Arabia, the Arabian Shield or the Nubian Shield. That belt of Archean rock with proven greenstone inliers in Saudi Arabia has long been of interest to the exploration community. And Robert has long had an interest in it. In conjunction with the new open attitude of the Saudi government, in particular, the Saudi government's willingness to share the financial risk, I think Robert's focus there is intelligent. I'm informed that he has now visited the kingdom, 8 times this year, which is what I think is required to be a success in a destination like Saudi Arabia.
Okay, let's see. From Bernard, Rick, what's your opinion about azimuth exploration?
Azimuth wore me out. They were a prospect generator that became, I would describe, first of all, a constipated generator, which is to say product went in, but it didn't come out. And they were also recidivist generators in the sense that they would drill their own projects if they couldn't farm them out to other people. I was, for a time, although no longer, upset with the level of general administrative expense relative to the level of third-party expenditure on their projects. Suffice it to say, it dropped off my interest list of project generators. The stock has done reasonably better of late as a consequence of the lithium rush in northern Quebec and the speed and intelligence, frankly, with which the azimuth management team has at least partially switched their exploration focus from gold to lithium.
Okay. Chris asks, any thoughts on Highland Copper and their Copperwood and White Pine projects?
I like what they're doing. I think the deposits are okay. I like big copper deposits. Decent-sized deposits with decent grades aren't attractive to me. In the copper business, I want tier 1 copper deposits, which I don't see there.
Paula asks, is Lundin Gold fully valued?
Lundin Gold probably is fully valued at this juncture. I think that what you will see is that Lundin Gold will likely use the incredible free cash flow that they enjoy from Fruta del Norte and also the Lundin's reputation to do another acquisition. There are some pretty good deposits out there that are, I think, selling at a discount to their potential, including the deposit that G2 and Reunion have that we've talked about so often. And I suspect that were the Lundins to take on a project that was in need of funding, that need would be gone immediately upon the Lundins taking it over. So I suspect that if somebody wants to be involved in the gold business this cycle, which I do, there could be worse names than the Lundins. It's important to note that there's adult supervision there. You don't have to worry about a management team that acts in ways that are contrary to the interest of the shareholders. Because the people whose name are on the door own over 20% of the company and are represented both on the board and among the senior executives of the company.
From Cohen, besides Meteoric, are you interested in any of the Australian ionic clay rare earth projects?
I don't know enough about them to answer the question. As a subject, yes. Do I have any particular names? No. That deposit is just so incredible in terms of size and grade that I couldn't resist it. Longtime listeners of me know that I'm agnostic, really, as to commodities. I'm willing to make money on sand and gravel if that's where it's to be made. And I wasn't necessarily attracted to rare earths because the metallurgy is complex. It takes a long time to get into the market. It takes a long time to get into production. But the idea that you had a deposit of this size at this price, at double the average grade worldwide, was just more than I could stand.
Roy asks for your thoughts regarding Victoria Gold and Agnico Eagle.
I don't own Victoria Gold, and I'm not tempted to own it. I think it's an okay deposit. It's one that's been a real trap for shareholders' funds over time. Double budget, that kind of thing. And I think the grade is adequate. Understand that it's difficult to operate mid-scale heap leaches in the far north where your material freezes in the winter. And I think Victoria faces that problem. Agnico Eagle is a different animal entirely. It is one of the largest and one of the highest quality gold mining companies in the world. They've made a couple of mistakes in 30 years, but really their track record with regards to capital allocation is very good. Their reputation with regards to mine building and mine operation is also good. I believe that Agnico Eagle belongs in any portfolio where the investor selects stocks for himself or herself.
From Leont, asking about Gold Group Mining.
I'd rather not answer that question at this moment. I'm doing a little bit of work on Gold Group.
Something's cooking. Alex asked about Hercules Silver.
We answered Hercules earlier. That's the one that had the silver deposits in Idaho that turned out to be outboard expressions of a porphyry with high-grade copper. I own it. Highly, highly, highly speculative, but you're speculating alongside Barrick and others.
Alex asked about Founder Metals.
I know almost nothing about Founder Metals, so I'll pass on that question.
Okay. Nice word of thanks from Tom. Says, Rick, I really appreciate the value that you and Albert bring to the table. Is the best way to reciprocate by continuing to attend boot camps, investing in Sprott products, and with Battle Bank eventually. All of the above are appreciated. Anything to add to that, Rick?
No, I think that's right. I only have an indirect interest in Sprott now as a large shareholder. I'm no longer an officer or director. I am a proponent of their products, of course, and as a shareholder, I benefit from you owning their products. The most direct way to express your appreciation is simply to participate in what we do, including, of course, the boot camps.
Yeah, and if you could spread the word too, especially about the classroom. Classroom is free to all. And I think we offer a lot of value here. So if you could just spread the word. Let's see, from Donald, can you talk about your thoughts on the cyclical precious metals bull market and where we might be currently in this cycle?
The last part of the question, no, I have no earthly idea. I've tried to forecast those sort of things for years. I believe that as long as we have quantitative easing, which I would describe as counterfeiting, as long as we continue to have debt and deficits, which I suspect is for most of the rest of my life, and as long as we have negative real interest rates, and I can defend that statement in a second, that I will be long gold and precious metals. When I say negative real interest rates, Albert, it's important that we quantify that. Most people equate the CPI as being a cost of living index, or more importantly, an index that chronicles the deterioration of the purchasing power of people's savings. But it's not. The index, first of all, is a manufactured index. It's hedonistically adjusted, which means that the big thinkers ascribe value that isn't the same as the value that you paid for your computer, for technology services, and for the place you live. In other words, it's a constructed index. Secondly, when it's inconvenient for the indexers, they don't include the cost of food or fuel. When people look at me, it's obvious I like to eat. So a cost of living index that doesn't include one of my favorite pastimes is of little use to me. But finally, the CPI doesn't include the cost of tax. The idea that a cost of living index, or perversely an index that measures the deterioration of purchasing power of goods and services that you buy, irrespective of whether you buy them willingly, is not one that is of very much use. I believe that the basket of goods and services that I buy, including tax, means that my purchasing power is deteriorating about 7% compounded. The how would you say, the counterparty to gold, I would suggest, is the U.S. 10-year Treasury. So if you look at the arithmetic around the U.S. 10-year Treasury, paying you what, 4.16, 4.17, in a currency where I believe the purchasing power is deteriorating about 7, tells you all you need to know about the arithmetic. The U.S. government solemnly swears that they will reduce your purchasing power by 2.75% a year compounded for 10 years, which is the first promise they've made me, which I believe they'll absolutely keep. And that makes me want to be long gold. But another thing does too, that is market share. Precious metals and precious metals related securities comprise less than 0.5% of the total value of savings and investment products in the U.S. market, down from a 4-decade mean of 2%. I believe in reversion to mean, particularly in light of quantitative easing, negative real interest rates, and debt and deficits. If that occurs, which I think it will, demand for precious metals and precious metals related assets will quadruple, which is precisely what I think is going to happen. When? I have no earthly idea. A lot of that revolves around confidence. I have much less than most people do.
Okay. And with that, we have to conclude here, Rick. So I want to thank you for the Q&A again. We had lots of questions. Sorry we couldn't get to them all, but we will be back before you know it. Mm-hmm.
I want to, if you will, throw out an idea to the people who are here, and I want to hear their response. I've been thinking that you and I should do sort of 2-hour-long sessions where we take one company and we interview them for an hour, and then the audience interviews them for an hour, using the lessons from the Rural Classroom. My suspicion is that any company that agreed to this would be a fairly good company. But let's disclose things. First of all, I propose to charge the viewers for this service some number like $20. And I propose to charge the companies that would be willing to subject themselves to the scrutiny. By the way, this wouldn't be advertising. This would really be a valuation discussion utilizing lessons in the Rural Classroom, but real time. I would propose to charge the company something like $5,000. I'd like to hear from the people who are attending this session of the classroom, whether they think that would be good value for $20 and whether you and I should trouble ourselves to do it.
Rick, we can create a poll, an electronic poll within Classroom for this. Is the answer you're looking for a yes or a no, or is there more information?
No. Yes or a no. If people have suggestions as to ways we could serve them better, I'm always looking for those suggestions irrespective and in any format.
Okay. The yays have it, Rick. Just look down.
Great.
The yays have it. So let's talk about it some more. That sounds really, really exciting. We've talked about it a little bit before. It's a great idea. Really, it's a great idea.
To me all the time saying, how do I access your audience? And I think the easiest way for them to access our audience is to get in the fire.
Love it. Okay, Rick, you got to go. I don't know what I'm keeping you from, but I don't want to keep you any longer. So see you again soon.
Thanks, everyone.
All right. Bye-bye.